Lumber liquidating flooring. Once a shining star in the home improvement industry, it seems almost unrecognizable today. But how did it go from a high-flying success to a cautionary tale about overexpansion, reputation damage, and failing to keep up with the changing times? Whether you know them as Lumber Liquidators or by their rebranded name, LL Flooring's journey is one filled with bold moves, significant setbacks, and lessons that we can all learn from. So let's take a walk down memory lane and explore how this flooring giant rose to fame, faced its fall from grace, and what it means for other businesses trying to navigate a rapidly shifting market. In 1994, a company named Lumber Liquidators opened its doors. A humble startup focused on providing affordable hardwood flooring. The concept was simple: offer quality flooring options at discounted prices, cutting out the middleman and passing on the savings to the customers. It wasn't revolutionary, but it was smart. And it struck a chord with homeowners looking to renovate without breaking the bank. Imagine this: walking into a store and seeing rows of hardwood flooring at prices much lower than what you find at big retail chains like Home Depot or Lowe's. You could practically hear the cash registers ringing as customers flocked to the bargain prices, trusting the promise of affordable home improvement. By the early 2000s, the company had found its rhythm. Lumber Liquidators, soon to be known as LL Flooring, expanded aggressively. The company opened new stores across the United States, and by 2007, it had become a publicly traded entity, allowing it to access more capital to fuel its growth. But here's the thing: the floor business was booming, the housing market was hot, and more people were renovating their homes rather than buying new ones. So naturally, Lumber Liquidators found themselves right at the center of that trend. As people moved into their new homes or remodeled their existing ones, the demand for affordable quality flooring grew. And Lumber Liquidators was there to supply it. This meant that business boomed. At its peak, the company had over 400 locations. They became the go-to name for home renovations. You could find them all over TV commercials, spotting their catchphrase, "It's your home, you deserve it." Customers trusted the brand for value and quality. The company also did well by offering installation services, making it a one-stop shop for flooring needs. And the future? Well, it seemed limitless. You know how sometimes things seem to be going too well, and then out of nowhere, something comes along and shakes the foundation? Well, that's what happened to Lumber Liquidators in 2015. The company found itself embroiled in a massive scandal when the 60 Minutes news program aired a segment revealing that their Chinese-sourced laminate flooring contained unsafe levels of formaldehyde, a chemical known to be carcinogenic.
Fastest growing retailer of hardwood flooring in North America, with over 360 stores in 46 states and revenues of more than $1 billion a year. But hardwood isn't the only product they sell. Flooring from Home Depot and Lowe's had acceptable levels of formaldehyde, as did Lumber Liquidators' American-made laminates. Every single sample of Chinese-made laminate flooring from Lumber Liquidators failed to meet California formaldehyde emission standards, many by a large margin.
The average level in Lumber Liquidators products that we found was over 6 to 7 times above the state standard for formaldehyde. And we found some that were close to 20 times above the level that's allowed to be sold.
It sounds like a huge amount.
It's a startling amount. It was so high, in fact, that one of our test labs thought their machine was broken.
The lab itself
It hit the upper limit of the radar gun, and they thought it was broken.
It's not a safe level. It's a level that the US EPA calls polluted indoor conditions.
Would you want that in your home?
No.
The backlash was immediate, and the damage to their reputation was significant. As customers began to question whether their floors were hazardous to their health, the company's stock took a massive nosedive. This wasn't just a public relations issue, it was a trust issue. When you buy flooring for your home, it's not just about price or appearance. It's about safety. The company's promise of safe and affordable flooring suddenly felt compromised, and in the aftermath, Lumber Liquidators faced lawsuits and regulatory investigations. It was a brutal hit to the company's image, and for a while, it seemed like they couldn't catch a break. Sales slumped, and their stock market performance continued to decline. But here's where LL Flooring did something clever. They rebranded. In 2020, Lumber Liquidators became LL Flooring, a move that symbolized their effort to distance themselves from the scandal and start fresh. Sure, it was a bit of a gamble. Rebranding isn't always the magic fix it seems to be, but it was a necessary step in salvaging their business model. Here's the thing about the flooring industry. It's competitive and it's evolving. While LL Flooring was busy dealing with the fallout of a formaldehyde scandal, their competitors didn't stop moving. Home Depot and Lowe's were already strong contenders, but now, smaller, nimbler online companies started chipping away at LL Flooring's market share. The rise of e-commerce was another shift that LL Flooring couldn't ignore. While big box stores like Amazon and Wayfair ramped up their online presence, LL Flooring's physical stores still dominated their strategy. And in a world that was rapidly embracing digital shopping, LL Flooring had to adapt or risk falling behind. Now you have to ask yourself, did they do that? Well, not really. The company struggled to modernize its operations fast enough to keep up with the changing retail landscape. They were still relying on their physical locations, and even though the pandemic had completely shifted shopping behaviors, for a company so used to its store model, pivoting to online wasn't easy. And beyond the broader market shift, LL Flooring also made a series of poor strategic decisions. Take their overexpansion, for example. The company opened more and more stores, but many of them weren't profitable. In some markets, they didn't even have a customer base to support their locations, and the stores that they did have were increasingly underperforming due to its competition and changing consumer habits. The decision to spend heavily on opening new stores while not investing enough in digital infrastructure or adapting their product offerings to meet consumer demand was a costly mistake. And by the mid-2020s, LL Flooring's financial troubles were hard to ignore. Sales continued to slide and profit margins thinned as the company struggled to keep up with rising costs and stagnant demand. Their attempt to lean into online sales wasn't enough to offset the decline of the brick and mortar foot traffic. The company also faced significant operational challenges, from supply chain issues to inventory mismanagement. When customers couldn't find products they wanted, or when delivery times were unpredictable, trust in the brand eroded even farther. And let's be honest, when you're renovating your home, timing is everything. You don't want to deal with delays or product shortages. Not only that, but LL Flooring stock, once a Wall Street darling, dropped dramatically as investors started to lose confidence. The company had failed to rebound from its earlier issues, and its stock performance reflected that. When Wall Street loses faith in a company, it's a signal that something is seriously wrong. And in LL Flooring's case, the company was running out of time to fix it. So what does that mean today? Well, LL Flooring is still in business, but it's clear that the company is still trying to find its footing in an industry that is evolving faster than it can adapt. They continue to operate hundreds of stores, but the company has made some major moves to downsize and streamline its operation. It's not over for LL Flooring just yet, but whether they'll manage a full recovery is anyone's guess. The lessons from their rise and fall are clear. Reputation matters. Agility is key, and the retail landscape is changing faster than ever before. But if there's one lesson to learn from LL Flooring's fall, it's that all businesses must evolve with the times. While the company stuck to its store-centric model, the world around it moved to e-commerce. Their failure to adapt quickly enough to online shopping and digital consumer habits contributed significantly to their struggles. Not only that, but the Formaldehyde scandal taught us that reputation is everything. If you lose your customers' trust, it's incredibly hard to get it back. And in LL Flooring's case, it wasn't just a scandal. It was how they handled it, or rather how they didn't handle it, that made all the difference. Sometimes it's the small decisions that can make or break a company. The constant expansion without assessing profitability or understanding the changing needs of consumers was a fatal flaw for LL Flooring. Strategic decision making needs to be grounded in understanding the market, understanding your customers, and understanding the long-term impact on your business. Now, here comes the big question. Is LL Flooring finished? Well, the story of LL Flooring is a reminder that no matter how successful you are, you're always one misstep away from a downfall. While the company still exists, the damage to its reputation and business model is significant. Will they recover? Well, only time can tell, but what's clear is that the business must stay adaptable and listen to their customers and be willing to pivot when necessary. As LL Flooring's story unfolds, we can only watch and hope that they find a way to bounce back, or at the very least, learn from their mistakes. What do you guys think? Can LL Flooring make a comeback, or is it too late? Let me know down in the comments below. And if you like videos like this, leave a like and consider subscribing, and I'll see you guys in the next one.